The way we do mortgages in the United States has just shifted. The real estate market is changing, and you should be paying attention. If you're following our HUD Secretary, Scott Turner, he's doing some incredible work in freeing up housing and making it more affordable and easily accessible to first-time home buyers who enter the real estate market.
You don't know what you're talking about.
At the same time, we're seeing shifts and changes in the banking or the mortgage industry as to how they lend to consumers as well. They may just announce that they're updating how credit scores are used to issue mortgages. Decades, we usually use the FICO method, and that has shifted now. We're now going to be looking at the Vantage 4.0 and the FICO 10T score. Instead of it just being one score, it's going to have a more robust outlook on your overall financial profile.
It's getting harder to read that script.
So instead of just looking at this one score, it's going to be looking at your consistency and how you make your payments over 24 months. It's going to be looking at rent payments, utilities, whether or not you're making on-time payments. It's also going to be looking at trends. So, okay, are you someone who maybe started out on the back foot, but you've been increasing your score, elevating your profile? Or are you someone who had resources and you've not been managing your money the right way? So it's going to give an overall picture. This is great, actually.
Hey guys, welcome back to the channel. I wanted to let it run to give you an example of why you shouldn't be listening to most of these people online. Now, beautiful young lady, very articulate in the way she's delivering information, but she has no clue, respectfully. Here's the deal. The cabinet that's working on the affordability issue, credit specifically, the hubbub that I've been hearing over the last 24 hours, nothing's changed. In fact, it's going to be worse for those of you that have bad character when it comes to your credit, because now that the credit algorithm is going to go over a 24 to 36 month time frame, trended data is going to hurt a lot of people. This first video, I wanted to let it play because it sounds good. And it's strictly sales. You guys have to pay attention and then check 2 or 3 sources and try to find a lender in this context that's in the business that can let you know what's really going on. Now, she mentioned the loan limit increases. Every year, FHFA and HUD come out with the new loan limits. It wasn't anything special. And over the last 10, 15 years, they have been increasing because the cost of homes have been increasing. And so this happens every year where we get the new loan limits. Now, when it comes to the affordability piece, there's competition with Vantage and FICO, Fair Isaacs, that the government is going to let into the room. Well, that should bring the cost of credit reports down, because what you guys don't know is that when you have a hard inquiry pulled on your credit report, they're running anywhere between $127 and $175 a pull. And that is very expensive. And you might not pay that on the front end, but it's going to be passed on to you prior to you closing. So that is what makes it affordable. Now, Vantage scoring model, if it's accepted, and I put a big if on it because lenders have their own rules. You see, what you don't understand is this. The government, FHA, VA, USDA, all of those entities, they insure the loans that the lender or the end investor makes to make sure that investor is made whole. And we originate loans, we lenders, mortgage professionals, put those loans together. So ultimately, they're sold into the secondary market, mortgage-backed securities, and a lot of different retirement funds, so on and so forth. And so that's what the government does. They don't lend the money. And so I say all that to say this. It's hard to change systems. But again, the best way to change a system is to bring in competition. Don't be misled with this information. Nothing's changed. And in my professional opinion, 20 plus years of doing this business, it's going to get worse. And I'll restate why. Because now the score that's on your credit report is going to be calculated by what you've done over time. Before, it was a snapshot in time where you could manipulate, and you had all these hucksters out here, credit repair places that was taking money from you guys for years on years. And if you notice, most of those folks are out of business now, because really you could go to the CFPB, Consumer Financial Protection Bureau, and you could repair your own credit, because the only way to repair it is negotiate lesser balances on older collections if that's what you want to do, and then create better credit going forward. That's really the name of the game. But with this trended data, it's really going to catch a lot of folks up. And the thing that's being touted as a game changer as far as your rent is concerned, well, if you've been paying rent, well, then it'll help you, because you may not have used other traditional lines of credit cards, so on and so forth. But if you have not been paying rent, like on 3 of the applications that I took today, and you have rental collections and things of that nature, this isn't going to make the lending process easier for you. In fact, it's going to make it harder. This is why a couple of weeks ago, you may have heard that on conventional loans, there's a lower threshold as far as a credit score is concerned. That's marketing, guys, because when you look at what makes up the score, we don't need a credit score. All I need is your credit report and your bank statement, and I can assess your risk level. I'm here to bring the real information so that you don't go out and get yourself discouraged, because if you have bad credit, bad character, bad behaviors, you need to start changing it, because now that everything is connected, there really is no fast, quick fix like there once was. So now I'm going to let someone else tell you what I just tried to summarize in a more eloquent, professional manner, because, I'm probably not that guy. Let go.
Everybody's talking about this new credit score change like it means buying a home just got easy. That's not exactly true. Let's break it down. Myth versus truth. Myth number 1. This means you don't need good credit anymore. Truth? You still need solid credit. What did change is how your credit score is evaluated. Lenders can now use Vantage Score 4.0 alongside traditional models, which gives a more complete picture of your financial behavior. So no, this isn't a free pass, it's a fairer test. Myth number 2. This will instantly boost everyone's score. Truth? Not everyone. Some people may see higher scores, especially if you've been consistent with things like rent or paying down debt over time. But if your credit habits are shaky, a new model won't magically change that. Myth number 3. This is only for people with bad credit. Truth? No. This is actually impacting a lot of buyers. Even well-qualified buyers could benefit from a model that looks at trended data instead of just a snapshot. So translation, consistency over time finally matters more. Myth number 4. This means it's easier to get approved starting tomorrow. Truth? Slow down. Yes, Fannie Mae and Freddie Mac are now allowing this change, and FHA is expected to follow. But lenders still have overlays, guidelines, and their own risk standards. This is a shift, not a shortcut. So here's the real takeaway. The system didn't get easier, it got smarter. And if you understand how to position yourself under the new rules, you don't just qualify, you compete better.
Well, looks like the old man know what he's talking about. Thank you, ma'am, for delivering the information in a very digestible manner. But I told you so. And so here's the deal. If you were qualified to buy before, you're going to be qualified to buy now. If you have to work on your credit behavior, it's more important now than it ever has been, because now they're going back to project forward up to 30 to see if you're a good candidate to borrow said funds to get onto the property ladder. If you want to get onto the property ladder, the next step to finding out where you are in that process is a consultation. The way you do that is you click the link in the top pinned comment or in the description of this video. If there's a fit, we can move forward and help you achieve your goal of home ownership. Check it out, guys. Let's be good to one another. Let us let grace abound. If you're not ready to pick up the phone and have that conversation, well, you're in luck. Continue to watch these videos. They'll help you in your education as you prepare yourself to get onto the housing ladder. Y'all stay blessed. Indeed.